Hello, this is Emmanuel Munsanje. My task this time around is to lecture you in a course called Cost Accounting. In every business studies, there are a lot of disciplines, and one of them is cost accounting. So today we should understand what cost accounting is all about and the purpose thereof. The scope of cost accounting. When you look at cost accounting, it's part of management accounting system, and it has cost data relating to budgets. Let me simplify this. When you're doing business, you incur or you spend something. It could be spending on materials, spending on salaries, spending on wages, spending on transport. Cost accounting focuses on what you spend as you run business. And then we shall see how it inputs into management accounting. But from this end, let's assume that cost accounting looks at your expenses as you run your business. Now, what is the purpose against that background? If you're doing business and then you're very concerned about what you spend in many areas, how does it help you? One, it will establish how much you incur to produce what you produce. It could be goods or services. So cost accounting is very important. It will tell you that for you to produce this, you have to incur this much. And then when you know that, it's going to help you set a selling price. A selling price is what you pay for the customers to buy. Logically, the selling price should be more than the cost, in order that the difference between the cost and the selling price is made, and this is called profit. And cost accounting will help you to value your stock. Now, what is stock or inventory? I'll give you an example. If your goods are bread and cakes, which you make and sell to your clients, your stock could be flour. You buy, you stock. Your stock could be sugar. Now, cost accounting will help you to say how much worthy is that sugar in the warehouse, how much worthy is that flour in the warehouse, and also obviously the stock of finished goods, which is bread in this kind of thing. So cost accounting is extremely important. And the other thing that cost accounting will do is that it is going to help you make comparisons between what you plan or what you budget to spend and what you actually spend. The difference is called variance. Now, management accounting is another discipline that is different from cost accounting. But the relationship is that whatever data you collect from cost accounting, you put it into management accounting. It's like management accounting is a recipient of cost data, so that this data is analyzed. And when this data is analyzed, the management accountant will inform or advise management on the nature of the cost, and management will make decisions on which way to go. So cost accounting is a smaller version of management accounting because, one, it is basic. It collects data and sends it to management accounting. So at management accounting level, this data is analyzed. Cost accounting system. When you see the word system, you should have in your mind a routine, a set of activities. Like we said, cost accounting is about what you spend in running business. Then the system is about gathering whatever you spend, analyzing it. And you have a series of activities that will involve the gathering and analyzing of the cost. And that becomes the system. Now, I want us to compare and contrast financial accounting and management accounting. On my left side is financial accounting. On my right side is management accounting. Now, the difference between financial accounting and management accounting is that, number one, for financial accounting, it's required by law for limited companies to make such accounts. But for management accounting, no legal requirement is there. That's the difference. For financial accounting, you have to write them in a prescribed format, which is according to international standards. But for management accounting, you have your own format. For financial accounting, information is in form of money or is monetary and it's historical. For example, you say, as at 31st December, what did I spend from 1st January? That means you look back, it's historical. But for management accounting, the information is both monetary and non-monetary. The information can be both historical and futuristic. So management accounting can help you to focus. Now, internal reporting structure. So when you look at internal reporting structure, in your mind, you look at a company, you look at an organization, then within or internally, there are reporting systems that are there. So when costs are collected and analyzed, they are reported to relevant managers. Remember, cost accounting is about expenses that you make, collect them, then report somewhere. So this is the internal reporting system. Responsibility accounting. When you look at accounting to the manager, it means you are given a certain responsibility to execute. Then you account to somebody above you to say, according to my jurisdiction, this is what I have done. And that is called responsibility accounting. Another concept worth knowing is cost center. When you look at the cost center, it is simply a department where relevant costs can be identified with. Let me give you just an example. Maybe you go to a supermarket, maybe like ShopRite. What is a cost center? There are various categories in ShopRite or in the supermarket. There's a bakery section, there's the meat section, the drink section. So each one is very unique and each one has unique expenses. Therefore, it's a center where those costs can be identified with. We shall see the relevance of that. Revenue center. Revenue is money the money in the organization. So the revenue center is the part of organization responsible for sales. It is actually the point of sale, the point where money gets into the organization. That is the revenue center. The profit center is part of the organization where both revenue and profits are analyzed. Now, when you look at the profit is the difference between revenue and cost. Revenue is money in, cost is money out. The difference is profit. And of course, money in should be more than money out for you to make profit. That center or that department where such analyses are made is called revenue center. Investment center. When you look at investment center, first and foremost, you must know what is it that we mean when we say invest. To invest is to spend so that we can have a return. For example, I buy a tractor so that I will till the land and make good of the returns that will come from my farming activity. So to invest is to spend with view to looking at what is it which I will get in the long run. So such a department where they analyze that is called a revenue center. Now, allocation of costs. When you are doing business, you have various costs. Remember, we are saying cost accounting is very interested in the costs that we incur. Yes. But then there are different kinds of costs. Here you have the cost called direct material. Direct material is the cost that you incur to buy materials that go into your products. For example, if you are making bread, what is direct material? It is the cost of flour, the cost of sugar, the cost of baking powder, because they'll go right into bread, right into your product. It is linked and associated directly to that. Another cost category is direct labor. Direct labor is the cost that is connected to what you are producing. Again, when you use the example of bread, the people who really do the baking of the bread are paid, and that is direct labor. Direct expenses are those expenses that are connected to what you actually are producing. Then production overheads. The overheads are indirect costs. An example of bread again. If you are baking bread, you incur electricity, but you cannot see electricity in the bread, so it's an overhead. Peradventure, you pay rentals in the facilities that you're using, but when you buy bread, you can't see the rentals in bread, you can't connect. So those are overheads, those are indirect costs. Administrative overheads. The administrative overheads are the expenses that cannot be linked to the product that you are producing. For example, what the managers will incur, in the running of the business can constitute admin overheads. Then the general overheads are not very specific, but they are incurred in the process of running that business. Cost unit. A cost unit is an item which carries all components of costs. If you are making bread itself is a cost unit, because within bread you incurred various kinds of costs. If you are making cars, a car is a cost unit, because that unit, that one item, you can actually see what you spent to come up with that kind of product. Now, what is the use of the cost unit? The cost units are very important to establish cost of each unit or service, so that when you produce so many, you can simply multiply and see how much it costed you to make such a quantity. And then costs are collected by cost technicians. So today we looked at what cost accounting is all about, what the relevance of cost accounting is also all about, how does it help us. And then we said cost accounting is extremely important because it will set benchmarks for you to establish the price of the goods and services that you produce. The price is the value you attach to your goods and services, and when you want to sell, it means that you should sell it beating the cost, the difference being called profit. Thank you so much. Thank you so much for today.